What's up everybody, Tom here with another video. Well, I hope everyone had a very Merry Christmas and of course is looking forward to the back of 2020 and the start of 2021. As I've mentioned several times on this channel before, I think 2021 is going to be another stellar year of trading and investment activity, and I think everyone should be very excited for that. In today's video, we'll be discussing our technical analysis using our top-down approach together on the S&P 500, dollar index, Bitcoin, gold, and more to try to find out what might be happening this week and into the coming weeks. Stay tuned. So with the end of 2020 coming to a close, guys, it's become time for, of course, the stock market pros, and they're trying to discuss what they believe is going to happen to the stock markets and other markets for 2021. And it's interesting to see these articles come out because the same types of things occur. And that is, all of a sudden, bear cases seem to be out the window. There is no bear case and it's bulls and stonks only go up, etc. That's pretty much the discussion that's going on online right now from at least the main media outlets. So we've got people like JP Morgan calling 4,400 for the S&P 500 by the end of 2021, and I don't necessarily think they're going to be wrong. You'll notice there's no discussion of pullbacks during this time, and definitely no discussions of crashes. If we have a look at some of the big analysts for their 2021 targets, you'll notice that JP Morgan are out in front at 4,400, and if you take the average of all of these, you get to around 4,027, which I think is pretty much in line with what even I think is going to happen to the market. The market should return around 5 to 10% over 2021 at least. And the reason why that is, of course, of all of the stimulus into the economies right now. Plus, we should hopefully see recovery due to the vaccine and other things coming out. Now, what I guess I'm getting at here is that corrections do happen in the market during these bull runs. They're not mentioning anything about corrections. Remember, when the mass media gets incredibly bullish and euphoric, usually that's a time where you need to be a little bit careful. And we've seen that play out a few times this year. Remember, just before September, the euphoric articles started coming out. We saw that pullback. And then, of course, the bearish articles came out and then we saw the pickup. So just remember, the mass media can help us from that aspect in telling us when maybe things aren't all that peachy and the correction possibly is just around the corner. All right, so let's get into the technical analysis. And I think the best place to start today is going to be the VIX, or volatility index. Here, of course, we have one of the bigger things that's going on right now, which has been the spike last week of volatility. And this tends to happen around the Christmas period. Remember, Christmas into the end of year celebrations often has less traders, and those less traders means less liquidity, and all sorts of weird spikes happen throughout the time. So VIX is coming back down. Anything above 20 still signals to us that we are in a highly volatile market. And if we do break underneath 20, which is where we've got some alerts set, we basically think we're in a pretty stable market. So still no stability, and pretty much ever since March, we have not been underneath 20. We've just been continuously very, very high with incredible volatility throughout. In terms of dollar index, that's something that we're looking at pretty heavily. Now, we've talked about this discussion several times throughout the year and several times throughout the last couple of months. And that's the discussion of, once the price of 92 was broken, we were really signaling down to around 88.9, 89 zone. And that hasn't been reached yet. But the more we hear about stimulus, the more we hear about maybe bigger stimulus, possibly further pressure from a fundamentals perspective will come onto the US dollar. If we go to a weekly, we can see here that there was a bit of a rejection last week. And why was that? Well, I think it's all about this 20 moving average. And it just shows you things like daily 20s really make a big difference. We noticed a trend. 1, 2 respects of the resistance. We talked about this in last week's video. The third one, another respect of resistance, a very quick sell-off. What a great little level. But now we could be entering what is an area of a bit of a range. We might go back up, test the 20 quickly here, and then start to range between the lows, the previous lows, and the highs, and possibly start to create a bit of a channel. Now, that's normal in markets. We've had a very aggressive sell-off. You'll notice we had some structure range starting to form around here for a little while for the US dollar. And now we may be looking at a bit of a structure range. And notice the distance here. If you took this distance and extrapolated it out, if it did range here and then break low, where's it going? The target. The range becomes the target. So the channel would not be surprising at this point, and especially if we hit more of a stalemate around the stimulus and we don't necessarily see everything passed, or maybe it goes into next year, etc., and kind of has to be scrapped and restarted, from how I understand it, then yeah, dollar index could get really interesting. But I would be going into the smaller time frames here on dollar index and just trying to create ranges and structures that might make some sense. There's not too much here for me right now, other than it's in a downtrend and we are in a bit of a range between a support and some resistances that we might see some chop in for the next couple of weeks. So that leads us to other US denominated pairs, things like cryptocurrencies as well. And here's Bitcoin, and you'll notice we've got a trend line set up here on a logarithmic scale. So I want to mention a couple of things about Bitcoin quickly for traders. Number one, we had that 20 moving average on the daily again, double respected. Any possible pullback now, let's say we hit 22,000, we'd be probably reaching the 20 exponential as well. So we'd have previous support, a psychological number, and the 20 exponential. Now, Bitcoin's powerhousing right now. It's at the time of this recording about 24,625 guys, which is pretty amazing. But look at what we could be seeing next. Possibly a 26,000 for Bitcoin coming off the hype and everybody discussing it over Christmas. Remember, it's very much a coin, or cryptocurrency in general is based on a lot of hype and FOMO over these periods. Similar to 2017, we saw some big strength around Christmas into the end of the year. And then obviously it all kind of fell apart into the Chinese New Year. And that was really the catalyst that sent Bitcoin and other cryptocurrencies down. But for now, it looks pretty strong. Obviously, the trend is up. We're going to go into the smaller time frame in just a moment. But check out this trend line. This trend line's been holding it, and it pretty much meets around that 26,000. So it would be worthwhile dialing into the smaller time frames and seeing what the price action is telling us. And if you have a look here, there was some great price action that's happened recently. Number one, something we discussed about, horizontal line. Some of my favorite types of role reversal just happened. This is a 4-hour chart. Look at this, previous resistance, guys. 3 resistance. I love that. The 1, 2, 3. It's great to see. And then we had the pullback back to it, followed by buying pressure, and we've now got a new high. So it looks like we probably power on to 25,000 or just underneath. Might be a little bit of selling pressure there. But what I can also notice here, and I'm sure a few of you are seeing this, is we also have a bit of horizontal support that's come through this. And this was basically a channel range. If we take the channel range extrapolation out, we then take that distance and then we put that to the break, notice it kind of hits just underneath that 26,000 as well. So a lot of bullish sentiment setting up for Bitcoin to be moving towards that 26,000. And whether you trade stocks or you trade commodities or you trade currencies or whatever, it's this kind of analysis that will work throughout several different things that you try in life. So I definitely recommend that you consider doing channel analysis, learning about structure, learning about trend lines, learning about, of course, trends. And this type of thing is really, really great. So Bitcoin looks pretty bullish for now on the medium to larger time frames. If we take a look at Ethereum, it's kind of a similar story. We've been talking about that previous 800 kind of resistance being the target over time. If we go down to the weekly, we'll notice that last week was very aggressive in terms of some flash selling that happened on Ethereum. But even on the daily, check this out. This little trend line that we had drawn up now for, I think about 2 weeks. We've basically had this one up. Look at this. The body closes were right on it. Even though it did get down, it definitely spiked and scared people. But we're back above that 620. So we hoped that 620 would have acted as better support. It came down to our trend line instead. And now we're getting our head above 620. And of course, now the big things that you want to be watching are 675 resistance break. And if we get through there, are we going to stop at 700? Very unlikely. Because it's only $25 away from 700, it probably smashes 700 at that point, and possibly we go to 750 or just under $800. $800 though will be something that I think a lot of Ethereum traders will be looking at if we are to get there. Bears of this type of market, you're really kind of struggling right now to find bearish opportunities. But I think a close underneath a trend line like this, or at least underneath the 50 exponential, would be one of the signals that maybe this big bullish FOMO trend is possibly over. If we take a look at gold now, gold is trading above that 1875, which is great to see. 1850 has really been the kind of level we've looked at recently, and 1900, those key $50 psychological increments. And I think that if gold continues its little bullish movement up here, we could get above 1900 hopefully. That will pressure us into previous 1930 resistance, and then of course 1960 after that. So what I'm looking for in the next week is really gold to come and pressure 1900, get past that hopefully, and if it does, then we're looking at some pretty strong markets here. In the shorter terms, like 1 hours, basically we're looking at a resistance break of this point. If you go through the video we did the other day, we talked about this exact area. We're looking for a body close above here, and look at how the market respected this zone. Shooting star, or pin bar as some people know it, straight off just before that 1883, 1880 zone. And that just shows you that this was clearly a very well marked level. And congratulations to people that were doing that analysis and discussing it with me on the channel. I really do appreciate your comments down below. So if you have comments about things you're looking at, share them with the community. Remember, sharing's caring, and it definitely helps us all out. So gold's pretty good. I like silver as well. Silver ended a week with a long leg doji. What does that mean? Long leg doji equals indecision. We now know that it clearly cares about this 26 zone. We already did know that. But it kind of had a crazy week. It went as high as above 27, went as low as below 25, and ended up around that 25.80 zone. I think if we get back above 26, it's really starting to signal, okay, we are bullish here on silver. And you'll know that I'm more bullish on silver than I am on gold because of the rebuild properties, because of course, electric cars, the requirements for silver throughout so many things in infrastructure, which is excellent. And gold doesn't have necessarily that much real world use like silver does. So we're targeting that 30 based on the previous range. This is going to be the medium kind of term target. Hopefully we can see that from a technical level. Remember, any break high here above the long leg doji really shows that the market is super bullish, because what is this? Indecision. You get a break close above that. Whew, that means the market is clearly telling us that we're bullish at that point in time. If we go down to the daily, we'll notice here that we're still seeing strength through this market. Nice little bullish hammer here on the 4 hour as well, followed by, probably a test of 26 sometime this week coming forward. But I like what we're seeing on silver, and let's hope that the bulls can remain in control of this particular pair. Well, let's take a look at the broader markets. Let's take a look at the Nasdaq to start off with. Well, the Nasdaq has been an interesting one. Firstly, of course, it looks bullish. We've had the 20 moving average acting as great dynamic support so many times now throughout this period. We've had basically buying pressure come through several times. If we go down to the 4 hour and we start to think about what's happening in the market right now, well, we've got some key levels. We've got that 12.8 resistance. We didn't quite reach it a lot of times. I think we got it once here, but that's going to be the key for the bulls now to get through. We get through 12.8, little pullback, pretty much signaling just under 13,000 at that point. And that's the bull case for the Nasdaq. But I will say that we're going to see a lot less liquidity, a lot less trading usually going on around this time. So for the markets, we may even see very small ranges, followed by maybe some like flash futures trading or something like that. Remember, flash futures trading is quite common, and we almost saw that last week on Monday, where Monday sold off pretty aggressively and then all of a sudden was up pretty much into the first hour of trade and really just then hovered for the rest of the week. So keep warning of things like futures trading. Futures trading can get wild during this time of year. Let's have a look at the S&P 500, and here we've got our trend line drawn that's been pretty stable at being able to actually pick peaks recently. We've had a high, March, of course, and then we had the September pullback, and now we've reached it again. Now, we've been here for pretty much the month. We've been here for all of December, and December has been a positive month, but not like insanely positive or anything like that. It's just been decently positive. So we're testing this resistance coming into the end of the year, coming into bullish articles being written about the markets, everything like that. So yeah, it's a tough time to basically be a investor right now and think that there's huge value in the market. Being a trader, well, we're just looking for opportunities on the smaller time frames. But the weekly is kind of testing this area. We go down to the daily. Again, it's basically just bouncing off the ranges. It's not been too interesting the last couple of weeks, and it's been more about picking your specific stocks. One stock section that I've been very happy with has been cybersecurity. I think cybersecurity was underappreciated. We talked about this on the live stream recently over the last kind of 2 months. I've said cybersecurity just makes logical sense to me for being something that's got a lot of great forward potential due to every little business coming online. And of course, just the rising amount of hacks that are going on. We've still got this 3640 zone. It acted as support. It acted as support, resistance, resistance, resistance. This is still a very key level for bears if they want to get control of the markets again. And we'd have to see, of course, pressure, close underneath, and then that will signal further sell off to our next level, which is about 3550. There's nothing else telling us that there's bears here in the market other than just some trend lines and saying, okay, we think it's high. So for now, any break of a new high is really going to signal going towards the next psychological number. We mentioned the Nasdaq 13,000. So I think that's probably when the Nasdaq hits around that zone, maybe the S&P will be hitting like a very nice level. Maybe it's 3,800, maybe it's 3,750, who knows. But at that point, you're probably seeing maybe a bit of the toppy market where it'll pull back for day traders. So I think key psychologicals are going to be one of the things I'm looking at in the stock markets right now. Now, a few people ask me in Australia, why do you never look at the ASX 200? And we do look at it. We just look at it when it's kind of important levels. So the ASX 200 is our top 200 stocks in Australia. Basically, it's our index like the S&P 500. We've become a bit choppy around this range. So you can see this beautiful break of 6,200. When we closed above that, boy, oh boy, did we start a very nice bull run. And now we're starting to struggle due to fundamentals and other reasons. If we scroll down through the smaller timeframes, we get here that kind of 6,600 seems to be heavy buying pressure recently. And I think anything under that, if we get a close, especially a close on a daily, which you'll notice here, that's going to be the signal that then pushes it back down to the 6,500. And then after that, can we get back down to that 62, 63? That's going to be heavy buying pressure if it did happen. For the buy side, I think the market might continue to kind of trade in this range for a little while. So we might continue to create structure, and the longer we coil and create structure for, the better the breakout's going to be when it eventually does come. So for Australian traders, this is the kind of thing we're looking at. The 20 moving average has been holding it up, and that 6,600 body close underneath that, I think would be pretty significant right now. US oil, another one we've discussed throughout the year. If we take a look at US oil, we can see here it's still going towards that $51. We had previous support levels. Previous support could act as resistance. Nice role reversal buy zone here on the smaller time frames that happened. Congratulations to all of you that got that. And of course, there's always another opportunity in different markets. So if you're only looking at a very specific market, maybe it's time for you to use a demo account, look at some other markets, start to learn the way they move, and that gives you more opportunity as a trader or possibly even an investor moving forward. There's always an opportunity in some market somewhere. And I think that's the beautiful thing about trading. There's just so much opportunity. So if you miss one, never feel the FOMO. Just move on, relax, and go into the other one. But never go buy something else just because you're feeling super FOMO. I think that's the story of 2020. You don't want to feel FOMO whenever possible, but at the same time, you want to be always optimistic and always have the ability to go and find another market. So that's it from me. Thank you very much. And of course, if you enjoyed this video, remember to subscribe and hit that alert button. We'll see you later on this week to discussing the markets and how they're going. And of course, be careful for the crazy volatility that can just flash the markets during periods of low liquidity. Good luck, everybody. See you soon.